What's up, guys? Justin McCray here. Welcome back to my channel. For those of you that are new, I'm doing financial news, markets, stocks, cryptocurrencies, all of that, wrapped up in a summary version, updates every single week, and just giving it to you in a simplified format so you can stay in tune with what's going on in the markets. So let's dive in today and discuss the rise of yields, where we see these rates going, the impact we're already seeing on equities, the pullback in the market, and then we have this obviously big debt ceiling crisis with the government and a potential shutdown. Okay, so let's get right into it. So discussing exactly where the 10-year went, topped out around 156, 157 in that range. A little bit of a pullback as of today, Wednesday, but you did see the NASDAQ drop out 2.8%. It actually has the worst day since March. You saw the S&P drop out 2% as well. And so, with the S&P and the Dow down roughly 3% for September, which we historically have seen, September, October, in that time frame around here, more of a softer time period for the markets. We do see slight pullbacks, but there's so much happening right now in this year, right? There's so much happening with the stimulus, with the government, with this debt ceiling. We have stuff going on in China. There's just tons of happening around this new administration. So what's going to happen with the markets, especially as the Fed starts to implement, their tapering, and what we see if, that slowdown of purchases on their side impacts us, how quickly will it, affect the market. So, obviously, if rising bond yields can hurt growth stocks, this, including tech stocks, are going to be number one, which I saw that already. That's typically because they lower the relative value of future earnings and can make, shares look overvalued when you see where they're at. When you look at the valuation of tech stocks, we do know some of these are pretty inflated, right? And so you have to look at that future earnings and how that impacts us with, the rising yields. So, if interest rates increase moderate from here, which we think they will, right? I mean, we do know the Fed discussed definitely next year at some point. I think mid-year, was the last that they discussed having an increase. Plus declining inflation expectations. It wouldn't surprise me to see the market bounce back up. Inflation is always a concern, but we do look like there could be a Q4 increase and a run on this as soon as we find the bottom from where we are right now, which I personally feel is a little bit ways to go. Yesterday, really the sell-off due to the rate increase, has been essentially signaling the removal of where the Fed is, in the market, because it's been propped up by the Fed. We do know this. Okay, the market's on edge overall. It's in this time period where, when do they start to pull back? How do people that have been in the markets, myself personally, having a great run over the past 12, 18 months, post-COVID, seen a great run up across the board, and people take some money off the table right now, and that's understandable. And then I'm a big believer in that. You should be taking some off the table over time, because you see these great run-ups, and nothing goes up forever. Okay, that's just true. Night and day. So this uncomfortable time period with the markets, and that's just going to be something where the next 30 days is really crucial with what's going on, what we're seeing. Everyone's waiting for this shift. I'm not saying people are, I'm not saying you should all of a sudden go short on almost everything. No, I mean, I think you should take some profits off the table and then see what happens and see how deep this pullback goes. Because me personally, this is not financial advice. I do believe we're going to see a little bit more of a dip, in that another 3-4% range. I'm more involved in cryptocurrency as well, and I do expect another 5% pullback there, somewhere where Bitcoin can bottom out around 36, 37, and then find its way back up for a strong Q4. So that's my input, guys. Go ahead, like and subscribe for more content. I'm putting this stuff out every single week and just giving you quick summary versions, quick updates on the financial news from the day prior, and just giving you it straight and clean, making it simplified. Okay, until next time, see you later.